Good day once more. It is a great opportunity to get across to you again. We are looking at the topic trial balance and balancing of ledger accounts. And this is a topic in financial accounting. And before we go ahead and look at this particular topic in detail, I want you to get some things that will enable you to put down some information like your biro, your notebooks, and so on and so forth, so that you can put down some things which you can revisit at the end of this particular class. However, before we go ahead and look at this particular topic, so let us quickly run through the learning objective. At the end of this lesson, learners will be able to 1. Define a trial balance. 2. Identify items in a trial balance. 3. Mention 2 uses of a trial balance. 4. State 4 rules of a trial balance. 5. Post items into ledgers. Now, looking at the meaning of a trial balance, according to its name, when we say a trial balance, so it is a schedule or list that shows the debit and credit balances which have been extracted with the ledger or from the ledger to show the arithmetical accuracy of such ledgers. That is, it is a list. It is actually a list of the debit and credit balances from the various ledgers, and they are extracted so that at the end of the day it will enable the bookkeeper or the person keeping the records to confirm or to establish whether the postings or the recordings are correctly done. What are the uses of a trial balance? The uses of a trial balance include the following. 1. It helps in testing the arithmetical accuracy of the double entry principle. That is, it helps to establish whether the double entry principle as applied in recording the various transactions are actually done properly or correctly. 2. It helps in the preparation of the financial statement. That is, it helps in preparing the financial statements of an organization or a firm. For example, the trading profit and loss account, the balance sheet, and so on and so forth. So all the trial balance plays an important role in the course of preparing all these financial statements. Then it shows whether the bookkeeper has made mistakes in his record keeping. And number 4, it reveals or shows the items that are used in the trading profit and loss accounts. And it contains the items used in the preparation of the balance sheet. So it is from the trial balance that all these items that are supposed to go to the balance sheet, where they are eventually obtained or picked. What are those items that are found in a trial balance? A typical trial balance is made up of the following. 1, we have the descriptions column or the columns for recording the various ledgers or accounts. That is the various account narrations or account titles. So that is where they are recorded or indicated. Then we have the column for the debit column, then we have the credit column, and we have the column also for the volume. So this is the structure of a typical trial balance. That is, we have the description where the account titles are recorded, then we have the column for debit, then we have the column for the credit balances. That is the debit balances and then the credit card balances. So the capital, so we definitely is going to have the credit balance, and it's going to be recorded at the credit column. Plant and machinery debit balance going to be recorded at the debit column. Premises debit balance recorded at the debit column. Opening stock recorded at the debit balance recorded at the debit column. Purchases debit balance recorded at debit column. And 6, say with a credit balance, and it's going to be recorded at the credit column. Rent and risk debit balance recorded at the debit column. Then bank overdraft credit balance recorded at the credit column. Then we have debtors and creditors. Debtors will be having a debit balance recorded at the debit column, while creditors will be having a credit balance recorded at the credit column. Provision for doubtful debts. So it's having a credit balance recorded at the credit column, and then provision for disposition having a credit balance recorded at the credit column. And at the end of the day, so adding all these different items together, so the value that is going to be obtained so must be equal, and that is the whole essence of having a trial balance, and that's the reason why it is referred to as a trial balance. In other words, the two columns at the end of the day must balance, must be equal, must have the same value. Now, what are the rules of recording of keeping a trial balance? The various rules include the following: all assets must be put on the debit side, all liabilities must be on the credit side, all income or gain must be recorded on the credit side, all expenses must be recorded on the debit side. Then we are going to look at an illustration on posting transactions into the ledgers, and from there extracting a trial balance. We are expected to record these transactions in the books of ABC for the month of January and extract a trial balance as at 31st June 2019. January 1 started business with 7,500 naira in cash. January 2 paid 3,500 naira of the opening cash into a bank account. January 3 bought goods on credit from Ajala 135 naira, Kayode 115 naira, Mark 55 naira. Then January 4 bought office equipment on credit from Ojo 108 naira. January 6 sold goods for cash 501 naira. Then this the illustration continues. January 7 sold goods on credit to Michael 24 naira, Obi 53 naira. January 8 bought motor van paying by check 240 naira. Then January 10 returned goods to Ajala 25 naira and to Kayode 22 naira. January 12 we paid by check Ajala 110 naira. January 14 paid cash which is 70 naira to Kayode. January 16 received loan by check 200 naira. January 18 so the following returned goods to Ross: Michael 4 naira, that is Obi 13 naira. January 19 repaid part of the loan by check 150 naira. January 20 bought equipment by cash 76 naira. January 21 cash sales 203 naira. January 25 cash purchases 111 naira. January 27 commission received by check 76 naira. January 29 rent received by cash 53 naira. January 31 withdrew 75 naira from bank for private use. So these are the various transactions as they occurred. Now, posting these transactions, we first of all want to obtain the cash book. We want to prepare the cash book first before we look at the preparation of the other ledgers. So, looking at the cash book, so we have the debit column, that is the debit side of the cash book. Then this side is the credit side of the cash book. And for each of the two sides, we have date, particulars, folio, amount. Then bank, that is we have amount which is for cash. Then we have bank, which is for check. Then we have date, particulars, folio, amount, and then bank also at this side. So January 1, the capital was that was brought in cash is 7,500 naira. So that one is debited to the cash column or the cash book. Then January 2, so bank. So an amount of money was withdrawn or was taken from the cash book, from the cash, and was taken to the bank. So in that regard, the bank column is credited, while the same January 2, the cash or the cash column is credited, while the bank column is debited. And this is a contra transaction or a contra entry as indicated here. Then January 6, we have sales of 501 naira. January 8, motor van 250 naira in cash, so credited. That is, that amount was paid out. Then January 12, Ajala January 12, so we paid to Ajala 110 naira. So Ajala was paid 110 naira. Then January 16, the loan that we took, it was 300 naira. So, and it's debited to the bank, that this was in form of check. Then January 19, January 14, so we paid Kayode 150, we paid Kayode 70 naira. Then January 19, we paid part of the loan, which is 150 naira. Then January 27, the commission was 27 naira. So, and which was debited. Then January 20, equipment. We bought equipment for 76 naira. Then January 25, purchases was 111 naira. Then January 31, January 29, rent was 53 naira, and January 31, drawings was 75 naira. So all these transactions are now recorded in the cash book, while all the other sides of these transactions were going to be recorded in the various ledgers. Then in balancing of this cash book, so January 31, the balance carried down under cash was 4,500 and 3,301 for bank. Then balance brought down also was 4,500 under cash and 3,301 under bank. In conclusion, based on the double entry principle, these various transactions have been recorded into the cash book. In addition, each of these transactions is further recorded into this ledger depending on whether that account gives out value or gains value. Assignment: what is a trial balance? State 5 rules guiding the preparation of a trial balance. Mention 4 contents of a trial balance and draw it or show it. The reference materials remain: 1. Simplified and Amplified Accounting for Excels by Femi Longe et al. Longe Publishers, Lagos. Business Accounting for West Africa by Omoya Gio, then Africa Publishers. Thank you for your